I'm thrilled to talk to you guys today about one of our sponsors, which is Sutterbox Productions. If you're one of the many artists trying to book your next show, look no further. With years of experience and expertise, Stutterbox is committed to catering to the thing that matters most in a show or festival, coming together for a good time. If you appreciate local businesses and a personal touch, this is the company for you. Find them on Facebook for more information today. Hello, everybody. You're watching / listening to the McAllister Hours. I'm your host, as always, Colton McAllister. Today, we are joined by special guest, Sarry Lbrahim. How you doing, man?
Hey, Coleman. Good. How are you?
Oh, I'm not too bad. Like I was mentioning before, we're recording this a couple months before it's going to be released, but I just got over COVID. So I'm hanging in there, chilling, Have you gotten hit with COVID yet, or you been lucky?
Yeah, I actually got COVID in August of 2020.
Oh, okay.
And then, it was like the back then when it was kind of bad.
Yeah.
I had it for like 2 weeks and then I got vaccinated and haven't had it since, thankfully.
That's good. That's good. Did you get really bad symptoms, or did you handle it okay, or?
I got all the symptoms, like no taste, smell, fever, body aches, like everything, like all of it. And
wow.
Yeah, it was pretty bad. It was like having the flu, but like times 10.
That sucks. See, my experience wasn't, sorry not to derail here, but, my experience wasn't, that bad. I wouldn't, but I also got Omicron. So, that probably has a lot to do with it too. At least I assume that's what I got. I never, I got tested, but they lost my test. So I don't actually know if I had COVID. I just assuming I had COVID. Anyways, before we, get too far down that rabbit hole, why don't you tell me a little bit about yourself, what you do exactly, what got you into wanting to do finances and help people with finances. Just tell me a little bit about yourself.
Yeah, absolutely. So I run a company called Financial Asset Protection. We're a financial services firm located in Chicago, Illinois, and we help clients in all 50 states and sometimes in Canada with financial planning, financial coaching, counseling, kind of just planning ahead financially, solving money problems, whether it be debt or saving up for a business or launching a business or saving for retirement. Whatever the case is, we can kind of handle and take care of. We've been in business for about 6 years, and that's kind of my background. As I'm a financial planner. I got my MBA about 7 years ago.
Okay.
7 years ago, I got my MBA. And ever since then, I've just been working in the financial services world and insurance world, helping people solve financial problems. And then I started a show called Thinking Like a Bank last year. And the show is, as you could tell, Thinking Like a Bank. We show how listeners can think like a bank by applying the same strategies and principles that banks use to help them find more financial freedom. So that's kind of our message and our objective. And we're on episode 45 so far, and it's going great.
Yeah, that's awesome, man. So let me ask you this first. I don't know. I don't know how much you want to reveal, or in terms of what your strategies are, but like, I guess how would you help someone that is having kind of financial problems, or they're right now we're at like a all-time high for inflation. People are struggling financially. Like, I don't know, what's like your general strategy or advice for when you're handling that kind of stuff?
Yeah, so general strategies, number one, I want to know the person I'm talking to. So we do first an intro call just to get to know each other. And then after the intro call, we do something called a financial analysis call. And this is all done virtually. So I'm doing this all on Zoom or over the phone. And we do a financial analysis. It takes about 60 minutes to do. And it's just me asking questions, getting to know the person, getting to know their situation. It's kind of like, for example, if you were to hire a lawyer, the lawyer's not going to just give you advice out of nowhere. They have to understand your case and then be able to give recommendations. Same thing when you go to a physician. They're not going to just prescribe you medication just from when you walk in the door. They have to ask you questions and then make the recommendation. Same thing with us. We can't just make any advice or recommendation. We have to know the person, know their situation, and then know where they want to go. So like, what is it that they want to accomplish, The financial analysis kind of is the map of where to go next. And then after the analysis call, we do like a personalized solution. This is where we present the solution, like typically over like a Zoom screen share like screen, Excel sheets and all of it, and show like, if you were to do this, then this could potentially happen. This would potentially help your situation, and so on.
Okay. So like, I don't know. Obviously, you said that there, different situations pertain to different people, but like, I don't know. Like, what's a general like portfolio of someone? Like, let's say someone just got out of college, struggling to pay back student loans or something, looking for a job. Like, obviously these are general, anecdotal type of things. But what I mean, like in that scenario, like, what would your general advice be? Would you say?
Yeah, so I would sit with this college student and I would, for example, I'd ask like, what are some things you want to talk about? And then they might say, like you said, student loans. I have, $100,000 in student loans I need to take care of. That might be their top priority at that age and at that situation in their life. And then so we would and I would ask, so what is it about it that's important? Do you want to pay it down as soon as possible, or do you want to extend it over, the longest period of time, which a lot of people do. A lot of people do extend their student loans because there are a lot of they're not looked at. The debt isn't looked at the same as other types of debt. Like having $100,000 in student loans is not the same thing as having $100,000 in credit card debt. Like you can still do a lot of things with student loan debt that you have. So we might strategize, and then I might even go further and ask like, what are some of your, what's your 5-year goal? And they might say buying a house or getting married. And we might think of, okay, so what do you need in order for that to happen? Okay, so you need 20% down for a down payment, and then how much are you making now? Where do you work? Do you get paid via W-2, via 1099? Are you self-employed or full-time employee? And then if you get paid W-2, about how much are you actually netting, like after taxes? And then what's your saving strategy right now? What are you already doing? Do you have just a regular savings account at a bank that you're putting into, or do you need help even like setting up? A lot of people in this generation don't even have a savings system. It's like over the years, like in the 1950s, like people saved like I think it was like 30 or 40% of all their money. And then over the years, that savings number has gone down dramatically, down to like 0% in this time and age. And it's not necessarily like a lot of people do have, after COVID, have had financial problems, but really it's the increase of spending and electronic payments and social media that's made it much faster to buy things and quicker. You can on your day, like while you're at work making money, you can go on Amazon and then spend more that day on Amazon money than you would at your job. So like back in the day, it wasn't possible to really do that because you had to physically go out places and there were a lot more constraints to spending money. Nowadays, it's like very easy. So a lot of people are having struggles right now saving their money. So we might identify like their savings behavior and then really kind of drive it into where they want to go. And there's like a saying, like you get what you think about. So when you actually plan something out and you actually like think about it, you're more likely to get it. So it's just a matter of like expressing what it is that you want and having a coach or a mentor helping you get there.
So it's a lot of sorry, I keep clicking that fucking pen. It's so it's a lot of mental perseverance, a lot of sticking to your stuff, basically.
Absolutely, yeah, absolutely. I think that the reason, so a lot of people think when they think of money, they think of a tangible item that they already have or don't have. In other words, it's either you have it or don't have it. And the reality is that people who make more money and have more money tend to think about money differently. They have different mindsets and different training around money versus the opposite. People who don't have a lot of money and don't make a lot of money, it's because of a lack of understanding of how money works in the world and how they react to money. So it's all about 80% of it, or it's maybe 85% of your financial situation in life is about the way you process money and the way you behave around it and what you do with money. So it's entirely a thinking process and a mindset process.
That's awesome. I've listened to some podcasts before. I don't know exact terminology, but like if you give someone who's a lower income a larger amount of money, they're way more likely to spend it because to them them saving that money doesn't make enough of a significant impact, in that, at least in their perceived, time, maybe I'm understanding that wrong, but
absolutely, you're right. Even expensive clothing brands and expensive things, they tend to target people who, just like you said, lower income people who just came across a lot of money quickly. That's the target audience. That's a target market for higher up brands. It's not rich people. In other words, these $1,000 belts and clothes, they're not targeting the wealthy. They're targeting people who are just between low and middle class and who just got a lot of money in a short amount of time. Because wealthy people are not going to go, like, even if somebody's worth like $100 million, they're not going to want to go and spend
Mm.
they'll think about it like, all right, should I buy this belt for $1,000, or I can invest in the stock market, or I could hire an employee with this, or I could, invest in some marketing and then make this money, like multiply this money by like 10 times over the next 10 years. That's how rich people are thinking about money. And that's why they have more money. And in my opinion, that's why I think the rich get richer. It's not necessarily because of a political status or an economic status, but more so it's what they're thinking about money and how they're reacting to, like, their perception on money. Like a regular person, for example, not regular person, but somebody who's not wealthy, if they walk into a store and something's $100, they might look at it as they have 5,000 in the bank, they buy something for $100, now they're down to 4,900. Somebody who's wealthy, who's an entrepreneur, who's an experienced investor, will look at it as they're walking into a store, they're going to buy something for $100. It's not just $100 they spent. They also lost the opportunity cost they could have earned had they invested that money over the next 10 or 20 years. So it's minus 100 plus the future of the future tense of that money.
Damn. Yeah. I mean, like you said, mindset has a lot to do with it. Let me ask you this.
Yeah.
What this is kind of general advice, but for people who, find themselves in a lower income situation and they really want to, they really want to be able to have that mindset where they think about money like that. What's your best general advice you can give to someone?
Yeah. So self-education is definitely more important than traditional education. And what that means is that it's more important for you to go out and find, there's, millions of books out there and podcasts and YouTube videos for you to first become self-educated. That's far more important than traditional education. Like, you'll learn more from listening to podcasts like this and watching YouTube videos about money from credible people and reading the right books than you would getting a bachelor's or master's degree or even a PhD in finance or economics from a traditional university. There's way more practical sense in self-education, and you learn more things quickly and more applicable to your situation. Like, if you got a master's degree in economics, you might learn like the last 1,000 years how the world was economically. That's not really going to help you today, and what you're going to be doing today with your money. So number one, self-education. Number two, you want to work with a professional the same way how if you wanted to get really good at basketball, or if you're in boxing or kickboxing or whatever sport you're in, and you wanted to go to that next big level, you would hire a coach. You would want to work with a coach. You would even want to go to a gym or some place where people are more experienced than you, and you want to train with them. And the same thing is true with money. Like, if you want to get better at money, you want to work with a professional, a coach, a mentor, somebody who can help you, somebody who's way ahead of you financially and could show you some of the ropes, either in the industry you're in or just about money itself. And then also, same thing, you want to be in an environment like the gym. Like, you want to be in an environment where other people are making more money than you. I think those two things will dramatically change you. And then if you want to get more technical and more, like, if you want to go further, like, in order for you to become wealthy, you need to also be parts of lucrative industries, things that make a lot of money, generally speaking. I think the top four are either real estate, financial services, healthcare, or technology. And those are very broad. Those four things can probably touch every career or every industry. Mm-hmm. So you want to do something that's going to yield you a higher rate of return. It's going to give you a higher return on your investment for the education you put into it and the training you put into it. And again, coaching and being around the right people will lead you in that direction.
I like that. Like you said, I think that's good advice for anything. What got you into being interested in finances? Like, what was the thing that sparked that?
Yeah, so when I was a senior in high school, we had to take one class. It was like basic, it was like how to write checks, what to when you go to the bank, like opening a checking account, savings account. And I actually liked that class a lot. Like, I knew a lot at that time already. At a very young age, I was already involved in money. I was good at saving, and I was good at like create, like, for example, I would like get paid at my job, and then I had an envelope like under my bed, and my goal was like $20 per week in there. And then the money was growing because I was isolating it away from me. I wasn't just saving it in my mind or saving it in my pocket, but I had it like separated. So at like the age of like 17, 18, I kind of had a good understanding of money. I had a credit card at the age of 18. I got into this all happened while I was in high school. Like, got into like that credit card. This is back. So before Obama became president, credit card companies used to give like seniors in high school, like somebody who's 18, they would give them a credit card, like $1,000 limit. So a lot of kids would get into a lot of credit card debt. And then I think Obama passed a law saying, all right, credit card companies cannot do that anymore. They
Jeez.
can't give 18-year-olds credit cards.
Oh, that was a good business
So I
move,
went,
huh?
so I got into credit card debt and out of credit card debt before I even graduated high school. So I
Wow.
had a lot of experience with money. And then even when I got into college, I wanted to get into business. I wanted to, it was, very general. Like, when you're a college student, like you want to do like one day you want to be a dentist and the next day you want to be like an architect. It's you're all over the place. So, but I still knew that I wanted to work with money. I wanted to help people solve financial problems. That's why I got my MBA. I wanted to kind of dive deeper into the business world. It was a good start. And then I started working at companies like Allstate and Blue Cross and Humana on different insurance companies, and got to see how they think, and how and what they do, and then that's when I started my own business. So long story short, I wanted to be a financial like problem solver, and I think that right now that's exactly what I'm doing right now.
Okay. Do you feel like there was there like a point where you decided to leave those companies like Blue Cross, Allstate, and
Yeah.
start your own thing? Is there something that kickstarted that idea, or is that just something you wanted to do from the get go?
Yeah, I've always wanted to own my own business. I wanted to be in control of my time. Like I travel a lot, and even when I'm traveling, I'm still working. So I wanted the flexibility, the freedom of being able to do, and then I also wanted uncapped potential. So a lot of companies I worked at, like you were capped, or you were limited to the area you worked in, or the products you were able to offer clients, or the amount of clients you were working with. Like you had a lot of limits because it had to align with the company's goals. So I kind of wanted to break free and then go like as wide as possible, as far as possible, and that's why I started my own business. And like there's so like in the financial services world, a lot of advisors who sell insurance and sell financial products. There's generally two paths to take. One path is the captive route, and then the other path is the independent. So captive is like you work for one company, you wear their polo, you have their business card, you carry their pens. You can only sell that company, you can only represent that company, and then you can only represent the products that the company has. And then you might even have like a territory, or you might even be limited to the state you live in. So there's a lot of limitations there. There's still benefits to being captive, but that's the limitation. Then independent is just like how it sounds. You
Hmm.
could literally open a company called ABC Inc. and sell whatever you want, and have your own brand, your own logo, your own. You could do it internationally if you wanted to. And really, the sky is the limit in independent. It's obviously much harder to do independent because you have to come up with all the marketing, all the system, all the processes. Whereas captive, it's kind of like done for you system. It's almost like a franchise system. Everything's already set. All you have to do is just follow their system and follow their rules. Independent, you have to create those rules and create the process. So I chose to be independent, and then kind of run my business that way. So that way, also too, I wouldn't be put in a situation where I had to help a client with a particular solution that was only going to align with the company. I wanted to align with the client's goals, if that makes sense. So I wanted to be more agile and flexible in the sense of being able to help clients in different areas. Like some clients might want to get into real estate investing. We could do that. We can help them with real estate investing. If they wanted to be active real estate investing or passive real estate investing, we can help them with that. So wanted to really take a step back and then focus on the client's interests.
Okay, that's cool. Let me ask you this question: like looking further into the future, like 10, 20 years, do you think that there's going to be more of a people doing what you do independent, or do you think there's going to be more franchise? Like, where do you think that's going to go?
Yeah, so we're definitely heading overall more towards an independent world. More people today are making money self-employed through 1099 contracts, in their own ways. That's what that explains why we're in the Great Resignation, right? Like I don't know, 4 million people quit like in a month last year.
Oh wow.
Something crazy, some crazy number like that in the United States. So we're definitely heading towards an area of more independence, both from companies, money like Bitcoin and cryptocurrency, and then NFTs and the way that we're operating. So in social media, so we're definitely heading more towards an independent world as far as journalism, economics, financial situations, employment, for sure. Yeah, more towards independent, I would say.
Definitely. And I'm assuming you being independent, you view that as a good thing. As I would agree.
Yeah, it's good for me and it's good for the clients too, because I could essentially do whatever the client wants to do. Like within, if it's good for them and it's beneficial for them, we could do it. We don't have to put our interest first or our kind of like our paychecks first. We don't need to do that. We can put the clients first and really focus on what they want to do.
I like that, man. Yeah, and we can talk about this more, towards the end of the podcast. But I'm a big believer in crypto and NFTs and all that. So I'm fully with like independent business people and people being able to make money independently. So that's awesome, man.
Yep.
Let me ask you this. This is kind of just a general question about like finances and how you described like making money yourself. Do you feel like you have to have a competitive nature to be able to do that, or do you think that's something that anyone can do?
I think that it's a good question. I think that humans are far more capable than they think they are. Like in other words, you can do way more than what you believe in.
I agree.
It comes down to training and education, more self-education, of course. And you could do anything you want in the world. You have to believe in yourself. You have to eventually say, I could do it, and then believe in yourself. And then, you get what you think about. A person gets what they think about. Whatever's in their mind throughout the day is what they attract through, in life. So yeah, definitely, you don't need to be competitive. I think you could be trained to be more competitive for sure. So there's this kind of this misconception that people have, and I saw this a lot, like growing up and in high school and college, is that people would categorize careers and opportunities with their personalities. Like, oh, I can't be a lawyer because I don't argue a lot, or I don't like to argue, or I can't be an engineer because I'm not good at math right now. And the reality is that that's not how the future is. It's not how your future is. It's all about training and having the right processes in place to get the things you want. There's also a book I wanted to, that would better explain everything I'm trying to convey right now. It's called Mindset by Carol Dweck. And the book differentiates somebody having a fixed mindset from a growth mindset. So a fixed mindset is where you apply your fixed qualities that you already have today to fix things that you believe you cannot control. Like, all right, I'm not good at math today. I got a C in algebra. I got a C in geometry. I'm not good, and I struggled. I'm not going to be an engineer or an architect because of those reasons. And the growth mindset would say is today you got a C. But what if you were to have the right training and the right process in place to get better at math, which you could do. It's like learning a language. You could do that. And then growth mindset would encourage practice and trial and error to get the things you want. So look, to answer your original question, you do not need to have natural qualities to be an entrepreneur. You just need to be trained, and you need an open mindset. And most importantly, you need to believe in yourself. You need to see more in yourself than you're seeing right now, and actually believe that you can accomplish anything you want to accomplish.
I like that. I feel like a lot of the reason why, this is kind of getting general, but, I think a lot of the reason why people don't think like that is because of, American culture. Very like handouty, like, gimme type of thing. I think that's changing though. I think the younger generations, like, we're talking about crypto. I think we are finding more independent people.
Yes.
But traditionally, yeah, it's just seemed to been like, you think about like the people like Wolf of Wall Street, that kind of stuff.
Yes.
Like most people wouldn't do that because there's such a level of risk to like making that much money. And like the people who work those kind of jobs, I mean, very few people want to actually have that work week, that like 60, 80-hour work week of like,
of course.
The thing people don't realize, like the people that want these, kind of handouts is like, the people who make that kind of money work way more than you are probably ever willing to do.
Yes.
That's just a sad reality. Like the very small sliver of people who make that kind of income, like their lives are hell. It's great, but like there's an aspect of it that for me personally, I could not grind like that.
Yeah, well, here's the thing. What if there's a way where you can make a lot of money in your life? And this is not like, selling a get rich quick thing, but I'm just saying, like, for you to think about this. What if there's a way for you to make, a lot of money in your life without having to, constantly work for that money? And that's where a lot of passive income comes in from. This is why a lot of people do real estate. Real estate is one of those things where you can build up for like 10 years of your life and then maybe longer. And then after that, reap the benefits of that in the future, without having to put in the same amount of work you put in when you were, 10 years ago. You know what I mean? So like there are ways that and this is where like the smart and wealthy come in, because it's like you said, like if you're working 80 hours a week to make like $500,000 a year, I don't really think it's worth it. Like you're never gonna be at
Yeah.
home, you're never gonna spend time with your family or friends, you're not gonna travel, you're not gonna have any hobbies really. Like the only thing you're gonna know is just work, and it kind of defeats the purpose, even if it was $1 million a year. But if you were working 60, 80 hours a week for, let's say, 10 years, and then after that you only had to work 5 hours a week or 10 hours a week, then I think that would be worth it. You know, and you could
Mm.
still earn the same amount of money that you did back then, plus more, plus a continuous and a continued growth with inflation and other things.
Mm. I like that. That's yeah. I think, like I said, we're going to a day and age where I think more and more people are going to be able to do that for themselves independently.
Yeah.
You know, your podcast, Thinking Like a Bank.
Yes.
What you kind of brushed over a little bit, but like, why did you start that, and like, how have you been able to like find the people that you do to like do interviews and stuff?
Yeah, so the reason why I started the show was I really wanted to give up as much free content as possible. I wanted to share strategies with people, things that they could apply, for them to kind of get out of the rat race and kind of live life on their own terms. So I brought on like accountants, lawyers, bankers, real estate investors, real estate professionals to talk about what they're doing. And every episode is about like personal experiences, personal things, not just about like objects or things, but more so about their personal lives and what they're doing, and how people could really just copy those strategies and apply them in their own lives. And I did the show also to spread more awareness about our company and how we can help people. And I think that so most of the guests have reached out inbound. They've come to us to be on the show. And also I reach out to some people too. I'm pretty active on LinkedIn and YouTube. So if I see somebody who's like promoting content about like, you know, raising capital or like becoming your own bank or things like that, I'll reach out to them and ask them to come on the
Hmm.
show as a guest speaker. And yeah, we just launched episode 45 today. It was a weekly podcast, and I'm looking to keep going, you know, and the
Hell yeah,
sky's the limit with that.
that's
Oh, and
awesome.
then another thing too.
Yeah.
Yeah. So I just so the show is called Thinking Like a Bank, the
Hmm.
podcast. And I just wrote a book called Thinking Like a Bank. It's more of an ebook. It's like a 40-page ebook, and
Okay.
I give it away for free. So like listeners
Oh,
can at the end I can share the website, but like we have
yeah,
a
yeah.
website you can go to and download the ebook for free, and it talks about financial strategies that literally the banks use and then that you could apply in your life.
Mm, that's awesome. And like I said, I think that's kind of the cheat sheet of this day and age, is that we get to kind of, there's a day and age where these things are kind of mysterious to people, how banks work.
Yeah.
And so I really like that you're doing that. And there is such and I didn't really discover this until like, within the last year, like there is a crazy growing amount of like financial podcasts. Like that's
Yeah.
like a whole like sect that like, you think about like Joe Rogan and all these people, you would never think like that there would be like, this rising thing of financial podcasts. But I mean, obviously you're an example of it. And yeah, it's kind of crazy.
Yeah, a rising of podcasts and like TikTok financial advisors.
Yeah, exactly.
That's like a thing now, but most of them are not actually experienced financial planners.
Mm,
They're just like selling a course or like selling
yeah.
like an idea.
So let me ask you this then, like
Yeah,
of the, I don't know, this is, again, I'm full generalization, so bear with me. But like
sure.
the kind of the blanket term of like, people that go on and have financial advice and stuff, like what percent of those people do you think are legitimate and have like legitimately good advice?
Maybe 10%. But and I'll
Wow.
give you and I'll tell you why. It's because if you flip that number, most financial advisors who are experienced and competent in financial planning are not on
Mm,
social media, or
that's a good
it's
point.
because they're first of all, it's because the average age of a financial advisor is 59 and a half. So that's right there. That's one indication that they're not going to be all over social media and all over online marketing. It doesn't mean that people in their 50s are not tech savvy, but that it means that they're most likely going to not be on social media. So that's one area. And then the other part of it too is that you can always verify, like, so all financial and insurance licensing, and I say insurance because a lot of financial advisors also encompass insurance planning within it. So almost all the licensing is public information. So if you are wondering if somebody's actually legit or not, you could just Google their name and then Google, like, so they have to either register with the federal government or the state government for some sort of state or state insurance or federal financial license. They have to have some sort of credential for that. And if they don't have anything, then that's one huge indication that they're not probably legit, you know?
Mm,
Again, it doesn't mean that if you don't have any credentials at all, you are not legit. That's what I'm saying. I'm saying in most situations, it probably doesn't. And then you could also look up their experience, look them up on LinkedIn, look them up, see what they've done. If they just, you know, are not just have like a TikTok account and a YouTube account, that's it, and then really no education or certifications or licenses, then I probably wouldn't take their advice. And a lot of them do general advice. They keep things kind of general,
hmm.
and like, oh, buy this stock or buy this, you know, this crypto or whatever. It's not really backed by like financial advice, you know.
I see. Yeah, I can imagine in the world of scamming and all that, that avenue specifically could be a problem. Quick anecdote: I had my ex-wife one time invested in a pyramid scheme. She
Oh,
went
really?
out. She went with a friend to a mall and came back and was like, "Hey, I just bought $100 worth of makeup." Like, are you kidding me? And she did the whole like explained it like, "Oh, but it's like this thing. I just have to sell it to this many people." It's like, and the funny thing was she had just moved to the city, so I'm like, you don't even know anyone. Like, who are you gonna sell these things to? So yeah. I mean, I think it's important for people to be smart. For people
Yeah.
to, and that's hard. I can imagine that there are a lot of people who, now more than ever in the day and age of the internet get duped financially.
You're right. There's a lot more of that because a lot of people want the passive income, the increase in income. They want those things, right?
Hmm.
There's nothing wrong with it. So it's possible, it's out there. I just think that a couple like ground rules are like it's never going to be fast. It's never going to be like, oh yeah, you just buy this one membership for $100 and then tomorrow you're going to make $100,000. It's never like that. And then you also want it has to be like realistic and logical what you're going to be doing. And then uh, work with always try your hardest to work with as many mentors and coaches as you possibly can, like professionals who do this on a daily basis, who are licensed, who have businesses, who are doing this professionally, and kind of work with them. There are a lot of advisors. So a lot of people think that in order to work with an advisor or mentor or coach, you have to pay them upfront. And sometimes that's true, but sometimes people will work with you like pro bono. That means like you only pay them after you get the results.
Hmm.
Or and some people, like for example, our agency, we only get paid after a whole solution has been implemented and after the client agrees to actually go through with the solution. This means that
Hmm.
you could do the intro call, the financial analysis, the solution presentation, get all the recommendations you want, learn more about your financial behavior, all that for free, because we get paid at the end. Once you actually start funding the solution, we get paid at the end of that, within that. So in other words, you don't have to pay extra for our services. And a lot of other people charge similar to this, to the way we do it. But because we don't want to scare people away. We don't want to say like, in order to get on the phone with us, you have to pay $300 an hour, and we start billing from the first call. A lot of advisors, I think most consultants and advisors charge that way. Like you have to pay them upfront for the services. It's not going to be just like 6 months of free advice and consulting and mentoring, until you actually implement a solution. So I just want to kind of put that out there, is that you might be listening and you say, all right, that's great. It sounds nice to hire professionals, but I'm fresh out of college and I make $30,000 a year. That's fine. We can help you.
I like that. Yeah, kind of like the idea of a lawyer. Like
Yeah.
um, yeah, because I like for me personally, I can imagine I would be, if I was trying to figure that out and somebody had these, just hit me with the fees right off the bat, I might be a little turned
Yeah.
off to. So yeah, I mean, yeah, I appreciate that you're willing to like work with people and that kind of stuff. Let me ask you this
Yes.
the last question I had. We kind of talking about like cryptocurrency and Bitcoin, Ethereum, NFTs. Like, what's your general thoughts and opinions on that?
Yeah, so it's tricky because I'm not a professional. I'm not an
Yeah.
expert in cryptocurrency. I
Hmm.
just think I have some Bitcoin, not some Bitcoin. I invested some into Bitcoin,
Hmm.
and I think it's a little bit volatile. I think that eventually, I had a guy on my show. The episode's not live, and he was explaining this to. He was explaining this to me. He's like, so right now when Bitcoin is $20,000, and then the next day it goes down to like 10,000, it's like a dramatic hit for a lot of people because people are looking at it as an investment. They're looking at it as like a stock, like their stock just dropped in value by
Mm.
50%. But he's like, eventually, what's going to happen with Bitcoin? This is his prediction. says that it's gonna go to like $100 million a coin, or even more than that, maybe like $1 billion a coin. And then that way, when every day it's dropping and going up $10,000 or $20,000, it's just like currency. You don't really feel it. Like the US
Yeah.
dollar every day is fluctuating, right? Against other currencies like the euro and other currencies. It's fluctuating, but because there's so many dollars, and it's trillions of dollars, we don't feel that like it's not like today we're gonna go to the store and something's $1 and we're gonna go back the next thing, it's $2 right away.
Yeah.
Because it's a for the most part, I think, a stable currency. And he says that Bitcoin that's the future of Bitcoin. It's gonna get to the point where it's gonna be a modern way of spending. Instead of you buying something with dollars, you're gonna use Bitcoin. He says that all the other currencies, cryptocurrencies, are kind of not even worth the time.
Oh, really? Interesting.
Yeah, just precisely Bitcoin. That's it. I don't know. Yeah, that's just that was his opinion. I don't really know much about crypto. I think that it goes back to the whole independent thing, right? It's like it's going to be the future, because Bitcoin, governments and politicians can't really mess with Bitcoin. They can't increase the value of it, or decrease the value of it, or sabotage it, and it's not a centralized system. So,
well, I'm pretty sure the Czech Republic caused Bitcoin's value to drop recently this last month. Yeah, there was some government thing where they didn't like Bitcoin, so the price dropped. So that I'm not like a financial wizard or anything, so my understanding is pretty vague, but that is kind of the fear of Bitcoin, is like government involvement. So like the US were to say, tomorrow, like Bitcoin's illegal, you can't use, if you are in the US, you can't use Bitcoin, like that would potentially take a hit in Bitcoin.
Yeah, you're right. They could do that, and they could, and governments could buy it, right? They could buy it in like billions of dollars, and then kind of mess. So you're right. They could kind of mess with it, because they could buy it and then like hold on to it for a couple of days and then sell it all, and then like a whole bunch of people would lose a lot of money.
Yeah.
So like I think there's things they could do like that, right?
Yeah.
But
no, I mean, I'm a big believer. I mean, like I said, you're more the financial guy than I am. This whole interview, I've kind of just been along for the ride, kind of, But no, I mean, I'm a big believer in like Bitcoin, the future of that and all that. So, but you would still recommend, like, I don't know, like I guess if you were to compare, like, going the route of Bitcoin or going, kind of what you do, would you still more recommend like what you do, or?
Yeah, I would recommend more safe solutions. I would actually want to find out like what percentage they want that's going to be safe. I would recommend actually a higher percentage. I would still do Bitcoin, and it depends on what the client's goals are, and it depends on what they want to get out of it, right? Like if they want to use it as an actual currency, that's one story. But if they wanted to invest their money, like grow their US dollars using Bitcoin, that's a completely different conversation, right?
Yeah.
So yeah, I definitely think that take a step back from all of the noise out there and all the products and the cryptocurrencies and the stocks and things like that, and kind of focus more on what you want to do and what your goals are, and then work with somebody professional who can help you connect all the dots for you. That's like my ultimate advice.
I like it. Excuse me, Sarry. This has been a great interview. I guess, do you have anything else you wanted to mention or discuss before we wrapped up here?
Yeah, Coleman. Yeah, it was really nice being on here. Nice talking to you. Yeah, listeners can download a free ebook if they want to learn more about the concepts we specialize in. They can go to thinkinglikeabank.com, and then they can download the ebook for free. It's thinkinglikeabank.com. That's also the name of our podcast. So you can check out the podcast if you want to learn more about how you could plan financially for the future. Just check out thinkinglikeabank.com.
Awesome. Sarry, this has been a great interview. Stay on after we end, and we'll talk briefly before I let you go. All right.
Yes.
Peace, everybody. Have a good one.